Good morning, everyone. Thank you for joining us again on our Restart, Rethink, and Rebuild series. We're very happy to have you join us as part of the Husch Blackwell Real Estate Development, Construction, and Finance team. We've been working to have some discussions relative to where the outlook is for the region over the next 12 to 18 months in that industry. And we've been lucky to have some great insights, context, and outlook from individuals like economists with the Federal Reserve, the Secretary of Commerce for Kansas relative to construction starts. And today, we're going to focus more specifically on the urban core and the outlook for the urban core. And as part of that, we're going to be looking at both not just infrastructure and development, but also workforce development. And we're very lucky today to have a national perspective with leadership from the former city attorney with the city of Houston, infrastructure investor leading us out of Washington, D.C., and Kansas City's own Lee Barnes, who has been a long-term leader in the Kansas City development and workforce area, particularly in the urban core. So we're very, very excited to have this discussion going on with you all today. Joining me to help moderate the panel is my colleague, Purvi Shah. And before we begin, I'd like to cover just a few housekeeping items. At the bottom of your audience console, there are multiple application icons for you to use during the program today. So if you have any questions during the webcast, please feel free to submit those via the question box. And we'll try to answer all the questions during the webcast today. And we anticipate particularly having some time towards the end of the session to go through questions and answers with our panel. If a fuller answer is needed to any of your questions or we run out of time, we'll make sure that those questions are answered via email as well. PDF for the presentation is available in the resources folder. And the program has been approved for legal education hours to the extent that applies to you. So to report your hours, just click on the CEU icon at the bottom of the screen, and the certificate of attendance, including course numbers, will be emailed to you tomorrow, along with the recording of the webcast for watching and sharing if that's something that you would prefer to do. Toward the end of the program, please be sure to complete our short survey. We use your feedback to plan future programs that are applicable to your business and industry needs, and certainly some of the planning that has gone into this topic and some future ones have been heavily influenced by that survey feedback, so we very much appreciate any input you can give us. That's all for the housekeeping items, so I'd like to just go ahead and get our program started. We're very excited to be talking with you today about the historical context impacting development, infrastructure, and workforce growth in distressed metropolitan and urban areas, and what the anticipated outlook is for investment, just like with the rest of our series, over the next 12 to 18 months, that short-term outlook given the realities of today's world. So we're looking at all of that in the context as a catalyst for economic growth, which we think is important for the Kansas City metro and metropolitan areas everywhere. And so with that, I'll turn it over to Purvi, and we can go ahead and get started. Purvi?
Thanks, Charles. My name is Purvi Shah, and I'm a senior counsel in the Real Estate Development and Construction Group at Husch Blackwell. And today we have three outstanding panelists for you. We're pleased to have Arturo Michel, partner in Husch Blackwell and former city attorney for the city of Houston, Texas. Jeremy Eby, the co-founder and managing partner of the Phoenix Infrastructure Group, and Kansas City, Missouri, 5th District Councilman at Large, Lee Barnes, Jr. Arturo has extensive experience regarding governance for various types of government bodies, such as school boards and city councils. He has advised these governing bodies on a regular basis, typically providing general counsel advice at their regular and special meetings, including for several years the largest school district, the largest community college district, and the largest municipality in the state of Texas. In addition, this extensive background necessitates Arturo's experience in general government law issues such as open meetings, open records, parliamentary procedures, statutory and local policy, and procedure applicable to these entities' ethical requirements in contracting and procurement requirements. Arturo is a leader in training for public governing bodies in the above stated areas of governance, ethics, open government, and contracting and procurement. As a city attorney for the city of Houston from 2004 to 2010, Arturo oversaw 100-lawyer department, and in addition to advising City Council, led a wide variety of litigation, including construction, commercial, employment, and condemnation, as well as handling matters pertaining to government contracting. Arturo's unique mix of public and private experience provides clients with a 360-degree perspective on how to consistently organize and execute both day-to-day matters, along with large projects and initiatives consistent with the laws and rules that apply to public entities and private companies that do government business. Our next panelist is Jeremy Eby. He is the co-founder and managing partner of the Phoenix Infrastructure Group, an infrastructure investment firm based in Washington, D.C. The Phoenix Infrastructure Group is focused on investment opportunities that provide economic growth, community engagement, enhancement of municipal operation efficiency, and citizen life. Before founding Phoenix, Mr. Eby was a founding member of the infrastructure finance team at an international finance advisory firm in Washington, D.C., and an infrastructure investment banker in Chicago, Illinois. Mr. Eby served as a financial and investment advisor to private investors developing infrastructure investment vehicles, as well as government agencies engaging private capital investments totaling over $8 billion in assets. Mr. Eby has been a featured speaker on public-private partnerships and private investments in public infrastructure, most recently at the P3 conference in Dallas, Texas. Councilman Lee Barnes is serving as chair of the Neighborhood Planning and Development Committee and a member of the Finance, Government, and Public Safety Committee during his 2019 to 2023 term. Councilman Barnes is currently the Director of Operations for the Swope Corridor Renaissance Upper Room, Inc., a nonprofit organization whose goal is to transform neighborhoods by developing education programs, providing a child development center, and rehabilitating abandoned housing. Councilman Barnes served as an at-large member of the Kansas City, Missouri School District Board of Education. While on the school board, he was elected to the position of treasurer and served as the chairman of the Finance and Audit Committees. Councilman Barnes currently serves as vice president of the Building Corporation Board for the Kansas City Public Schools. In addition, Councilman Barnes served on the Tax Increment Finance Commission and is currently the chairman of the Planned Industrial Expansion Authority. I will now turn it over to Arturo Michel to start our program.
Thank you, Purvi.
You're welcome.
I served as a city attorney from 2004 to 2010. That was the 6-year term limits in Houston back then, and then the initial 4 months of his successor for transition purposes. And during that time, I saw Houston truly develop into what sociologists say the country will look like in 2050, which is multiracial, multi-ethnic, minority majority. But Houston, like a lot of urban centers, remains to a significant degree racially and ethnically segregated in residents and with significant income and education disparities. And even a growing population has its ups and downs. We lost some people because of Hurricane Harvey, but we gained anywhere from 25 to 40,000, some estimates are double, of Katrina refugees in the last decade. And Houston, like everyone else, experienced the boom times at the beginning of the last decade and the recession at the end. What I saw when I was there, and what I think is still the case today in your large urban areas, is you have constraints on raising revenue. You have things such as revenue caps, voter resistance, you have growing costs from pension obligations, you have crime and inadequate law enforcement funding. Quality of life issues are always concerned. Are there sufficient resources for parks, green space, libraries, pollution issues, traffic remains an issue, and everyone struggles to have sufficient mass transit to alleviate the automobile traffic. There's insufficient public housing stock and an undereducated workforce and not enough job opportunities. And then you couple that with the trend I think you're seeing in the movement from people from the suburbs to the city to some degree. There's a movement to reduce work travel time. There's a desire for mixed use space. There's wanting to be closer to amenities. And then I think with that, you're also seeing in government a recognition that broader jurisdictional solutions are needed. And what I mean by that is, at a minimum, a regional, if not state or national approach is needed to solve some of these issues. So for example, healthcare in the specialty areas is focused in the urban core, but it's used by all residents. Water infrastructure and availability go beyond city's borders. Transportation needs are regional. The maintenance, use, and quality of highways and roadways is regional. And higher education facilities are often located in or near the urban core, but the education needs exist throughout the region, extending to the rural parts that are in many, a relatively short car drive away. And so governments try to find ways to bridge this. For example, the Woodlands is George Mitchell, the pioneer in fracking, developed a community a few decades ago in North Harris County, the county where Houston sits. It extends into the adjoining North County, and it's called the Woodlands. It's because of annexations, Houston grew quite a bit. There were no intervening cities. Beginning in the 1990s, though, there was a lot of resentment to that. The Woodlands is a planned community. It's wealthy. Last census, it was about 94,000 people. I'm sure it's exceeded that. What Mayor White did with a state senator, Tommy Williams, they brokered an arrangement where the city of Houston agreed not to annex for several decades. In return, the Woodlands would dedicate a percentage of its sales tax revenue to regional projects, such as roads leading from the Woodlands to the medical center. And that dedication at that time was estimated to raise about $45 million over 30 years. You all are very familiar with, I think, P3 needs and what's occurring. What I wanted to emphasize is really education and workforce development. I think that is going to be the key and what is going to be needed to lift transportation, housing, utility infrastructure. When I was at the city, there were several projects, amenities really, Discovery Green. It used to be 12 acres of dilapidated parking lots in the downtown area next to the convention center. It's now a urban park. It's 12 acres. It has a 1 acre lake. They freeze it so you can ice skate in the winter, go figure, in Houston. There's a children's playground, interactive water features, an amphitheater, trails, dog parks, Buffalo Bayou Park. Houston is known as a bayou city, the waterways that run into downtown Houston and the Gulf of Mexico. That bayous from the downtown going about 2.5, 3 miles to the west is transformed into pavilions, trails, nature conservancy. Central Houston is a municipal management district that has benefited from tax increment financing. So the tax revenues in that area, if they grow above a certain level, that increment is dedicated back to that area. You've seen increased downtown residential development. You've seen the development of a downtown rail line, new hotels, professional stadiums in baseball, basketball, soccer, expansion of convention center amenities, restaurants, entertainment venues. Washington Avenue, which kind of parallels that bayou I was talking about, so running about 2.5 miles due west of the city. When I came to Houston in the mid-'80s, was empty parking lots, used car lots, dilapidated buildings. It's now an entertainment and restaurant venue with high-end residential housing, both single-family and multifamily, adjoining it. And so you have these successes, but it touches really only on a small part of Houston. And there's so many other needs in other areas. The current mayor, Sylvester Turner, has recognized this and has started a complete communities program to increase green space. I have a couple anecdotes that I think highlight what I'm trying to emphasize. Management districts in Texas are designated by the legislature. They can impose assessments on businesses in the area. They're used for certain improvements that are permissible by statute. In the near Northwest Management District, which is not quite in the central urban core, but just outside it, I would speak to civic clubs when I was city attorney with a then state representative, Sylvester Turner, now the mayor. Our focus was crime, graffiti, dilapidated buildings. The city had an effort to try to improve the quality of life, bring in higher level supermarkets. They only had the lower level that tended to serve lower population, limited offerings, In speaking with supermarket officials, the ability to attract a reliable workforce that can live nearby or has adequate transportation became a hindrance back then. Now that's starting to change. Homes that were undervalued are selling, new apartment complexes are near capacity, businesses moving back. But all of this takes time. On the education front, I serve on the foundation board of the Houston Community College, have for about 15 years. I've seen where students struggle with what we would consider a minor annoyance with a car problem, forces them to drop out for a semester. You see students that are underserved by their K-12 education. They begin taking community college courses. They have to take remedial courses. Those they pay for, but do not provide credit, don't advance toward a degree or certificate. They get discouraged, they drop out. But there are bright spots. HCC has a corrosion engineering program. It is a 2-year degree. It's pipeline corrosion. And when I heard a presentation several years back, the program director was very proud of the fact that he said, you only have to go to get your 4-year degree. They partnered with the University of Texas at Tyler. You only have to go to Tyler once to walk across the stage and get your degree. Now, he wasn't making a criticism of Tyler, Texas, but a recognition that a student was able to get a 4-year degree at a 2-year community college cost and live at home. Tyler's about 3.5 hours away. So it's a little over 200 miles by car. It's a little less than driving from Kansas City to St. Louis, a little more than to Omaha or Springfield. But a lot of what happens in education and workforce remains lacking in Houston. The city leaders did quite a bit of hand-wringing when Houston did not make the first cut on the Amazon headquarters list. And much of the focus of our Chamber of Commerce has looked at what we have in terms of workforce development. I think what you really need is a high priority and focus by government, nonprofit, educational institutions, and the private sector. And I think there are going to be real opportunities, and urban areas are going to be hungry for the need for resources in that area. And I think that is going to be a trend that will continue in the future. And with that, I'm going to stop and move on to our second presenter. I believe it's Jeremy, am I correct?
Yes, I believe I am next, Purvi. It's can I say it's an honor to be sandwiched in between Arturo and the councilman. I hope I can add some solid value, an additional perspective to this conversation. My name is Jeremy Eby with the Phoenix Infrastructure Group. We're a Washington, D.C. based investment firm focused on infrastructure, public-private partnerships. I've been fortunate to have experience in a lot of places. Just personally, I'm from the Midwest originally, from Chicago, and our firm has been engaged in projects in Florida, Texas, Carolinas, New York, and looking at doing additional projects as we can in the Midwest as well, and out west as we get there. I think that Arturo brought forth a lot of really good points, and the main theme I get from it is just the dynamism, the responsibility, and the importance of urban cores. Just simply put, the most dynamic parts of our country. They own and are responsible for the most significant assets in the United States: your airports, your water systems, your transit systems. I can go on and on. Your civic buildings, a lot of them, as far as an asset value, total asset value, are based in urban cores and urban cities, and controlled and financed in the responsibility of the urban core and municipalities. And along with that comes a lot of the responsibility for not only for the operation, maintenance, and the financing and the continued construction of these assets, but all of the additional civic and personal ties to these assets in which the service they bring, the social impact dynamic that Arturo hit on. I think that's a really interesting and really important piece to this conversation that I appreciate that Arturo hit on. Now, the challenge that is pretty clear right now, it has been, but is really clear and has been exacerbated through the COVID dynamic, is it's pretty clear that there's financial challenges that make it not only more difficult to continue to operate these assets as traditionally has been done, but to basically enhance them, to do kind of to meet the greater interests, the social interests that Arturo hit on in relation to creating and expanding opportunity for those that are in more difficult situations, and creating what is clearly now an effort across the country to create more equity. A lot of that responsibility in many cases comes upon cities and upon mayors and upon councilmen and upon agency heads and their colleagues, and that's becoming more difficult. I'll give a few data points just to kind of to lay that out, some of which I got here from the National League of Cities. They took a survey. This was in April, May, I'd say almost at the beginning of the first quarter of the COVID impact. I'd say we're now in this. We don't know what term we're in, but I'd say we're in a new phase over this summer. But at that time when the survey was taken, it's been estimated that $360 billion in revenues are expected to be lost by cities over the next 3 years. 65% of cities are expecting to delay or cancel capital or infrastructure projects. That's 65%, and that was in April. So I'm guessing that number is higher. 100% of cities with populations over 100,000 are expecting revenue shortfalls. I know that number, and we don't. And again, that number, that stat is a clear stat, but we don't know how big that number is. 360 billion was the anticipated fall off, and I think it was mentioned. If you're looking across municipalities at the time, it was about 20% decrease in revenues expected for this year. I think that's been pretty consistent, but it may be higher. What that all tells you, those stats tell you that it's harder. It's going to be harder for municipalities to carry the weight themselves. There's also significantly less expected funding for municipalities as far as infrastructure investment. We're taking a very close look at Phoenix at where the Senate and the House bills are coming forward as far as the next potential stimulus package. We haven't seen a lot yet directed towards cities, but we're still following that as well. Again, the point is that the challenges are pretty clear here as far as your municipalities and urban cores are going to have to do, or may have to do more, are expected to do more with less for an extended period of time. Now, what that does is I'd say create an opportunity for others to participate. Arturo mentioned public-private partnerships. That's what we do. We're an investor. We look at projects that add value, that have social impact. We look at across asset classes: transit, transportation, water systems. We look at renewable energy. We look at anything that in ways we can add value to communities by providing not only private capital, but market-driven efficiencies, technological enhancements, and social impact enhancements to communities, especially urban communities where we think they add the most value. So there's a lot of capital in general that is waiting and looking for opportunities to invest in different kinds of projects, as long as they can, in some ways, get some kind of positive return for those investments. And I think that the next challenge is for these urban cores to basically develop projects, develop opportunities, develop basically systems or services in which they can work with the private sector potentially to deliver better services for their communities. That's going to be the challenge. That was the challenge after the Great Recession. You saw some cities really advance. You've seen Kansas City itself make serious strides in investment through engagement with private sector. I can definitely speak to the airport project. That was definitely a success by Kansas City. And I think that's going to be the trend for quite a while. And it's possible, just putting my DC hat on for a moment, that we may see some support from Washington, D.C. Hopefully we can, if they can agree to do that. to support. But I just would, before I hand it to Councilman Lee, I do want to say that the interest here on our side, from the private sector perspective, is that we're here to support. We're here to help provide opportunities that are mutually positive and opportunities that are inclusive and opportunities to create value. And I will say there's a lot of capital and a lot of interest that's willing to do that. There is also the conversation on the private sector side you hear a lot is ESG, environmental, social, and governance dynamics, in which it is required by investors now that invest with us that we look into projects to provide positive impact along lines of environmental, social dynamics. We know the social equity issues and governance issues as well. So there's a significant, we're at a very interesting time where there's a lot of I'd say, potentially symbiotic dynamics that, if brought together well and continue to be brought together well, could create value, especially in urban cities. I believe that it's the challenge of these municipalities to really go out there, run a great assessment of where they want to be, where they are, and what they need to get there, and how they can engage private sector investment, private sector capabilities, and intelligence and market-driven intelligence to create those opportunities across the board. So with that, I will hand it to our next speaker, Councilman, to you.
Thank you, Jeremy. It's going to be a hard act to follow Arturo and Jeremy, both who are legal scholars. I'm just a lowly engineer who happened to have got elected to a city council post. But I've had the good fortune of having worked in the development realm for several years now. I was a chairperson of the Planned Industrial Expansion Authority, which is a tax incentive agency here in Kansas City. I also served on the TIF Commission some years ago, and now was reappointed to the TIF Commission. Our mayor here in Kansas City now seems to want to have a kind of a core group of people involved in all of the tax incentive agencies and development agencies. So I actually serve on our EDC board, which is the Economic Development Board of Kansas City. Both Arturo and Jeremy mentioned kind of a wealth of things that we are looking at and need to look at from a municipal standpoint, but also kind of infusing some of the interest of private development and private development funding. And as I look at how we move forward, there are a few things that I see that within the next 12 to 18 months that are going to be crucial as we try to move forward in terms of working different types of partnerships and in terms of trying to get development done within the urban core. One of the things is developing substantial community benefit agreements. And those are usually done with projects that are in the more affluent areas. But if we try to tie some community benefit agreements to projects that are in our downtown area, our crossroads areas, which those are areas that are up and coming, and we try to tie those back to giving community benefits for what we call our severely distressed census tract areas, which is east of Troost and here in Kansas City. I think that's going to be crucial, particularly in the day of development being at a point where it's going to really need to seek private funding. I think back to just a few weeks ago, we've had come before my neighborhood planning development committee. A company asked for an extension of 13 years on a tax incentive in which they had 20 years of totally abated ad valorem taxes for 20 years. And communities are now thinking that is not necessarily the best way to go for for cities to continue to give those type of tax incentives, tax abatements. The plan is that, for 20 years, you were going to grow your company, develop that particular area with your business, and they did a good job of adding a great number of jobs, but it's a hard pill to swallow for us to understand that you get bought out by an international company and then and you're profiting, but then you ask for 13 more years of tax incentives, property tax abatements per se. So those kind of things are going to be questioned quite a bit more. It's going to be more emphasis put on how do we develop what we call the urban core, particularly in those areas that have been severely distressed for 15, 20 years. But one of the ways that we do that are with kind of smaller public-private partnerships that can lend itself for development around other things. Prime example is there are two projects in the 5th District here that I was a part of over the last few years. One is called the Veteran Community Project, which is an area of about 15 acres in which there were 50 tiny homes developed for veterans, homeless veterans. And the partnership included the city giving the land to the nonprofit Veteran Community the Veteran Community Partnership, and getting other contractors to put in water lines and those kind of things. And VCP, which they're called, actually built the houses, raised money to build those tiny homes, and they've been a great success, and they're moving across the country to do that, to do more of that. And that has now sparked other development around that area. Another public-private partnership that we've entered into is the Kansas City Campus for Animal Care. The city needed a new animal care facility for stray animals and those kind of things. It turned out to be a $20 million project, of which the city guaranteed $14 million of the project. And we did that in partnership with an organization called the Kansas City Pet Project. Now, that's developed in an area in which we have other major developments going around. So those are the kind of things that kind of are the impetus for development in what we call distressed areas. A few other major projects and major development areas in town, some of which have been either vacant or blighted for years, are starting to get some traction with new development partners. One of them is a project that had a TIF on it some 15, 20 years ago, but the development never happened. But now we're moving on that, and we've got a urban development company that is really making traction on that. We're also seeking for our historic district of 18th and Vine, where the city owns about 60 to 70% of the properties now. Properties had become so blighted that we felt it incumbent upon us that in order to keep the historic designation, keep the whole notion of jazz in the country alive, jazz in Kansas City, we needed to start putting dollars into that area. We've already put the Kansas City, the American Jazz Museum is there, as well as the Negro Leagues Baseball Museum. And we have the Paseo YMCA, in which Negro Leagues Baseball was actually, the contract to develop the league was actually founded and started. And that's in that same vicinity. So it's incumbent upon us to seek development in that area, and we now have RFPs on the street for a great number of the buildings down there, which I think are going to reap some great benefits. The city owns the building, so we can negotiate in several ways on how we want that area to be developed further. I'll just kind of end with this. We were fortunate in Kansas City to create what we call a Central City Economic Development Tax. And the tax is an eighth of a cent sales tax that will generate about $10 million a year for a specific area, which is from 9th Street out to 65th to 63rd Street, or actually 75th Street, and a swath of about 20 blocks long, east to west. And that is the core of our severely distressed census tracts. And not often are cities able to get a vote like that put on the ballot, and or a tax like that put on the ballot and actually passed to raise dollars specifically for those type of areas. We're well on the way of several good developments happening within that area, several of which are neighborhood housing redevelopment, with neighborhood housing redevelopment, small firms who are using those projects as workforce development projects to teach the skills of carpentry, plumbing, using and actually working with some of our labor unions for them to use apprentice guys to help complete some of those projects. And while they're helping, they're actually learning the more detailed skills in which they'll need to move into bigger projects. So I'll just end with that and kind of talk about, kind of lead our discussion. I hope our discussion kind of talks about how Central City Economic Development Tax, as well as other tools in our toolbox, such as the Opportunity Zones funding and other economic tax incentives, can help us spur more development, particularly with the fact that we are looking for more private investment to come in. And from there, I'll end there and want to thank Charles and the rest of the group for allowing me to just talk about those things that are happening here in Kansas City, as well as kind of look at how those things that are happening in Kansas City kind of relate to what's going on across the country.
Thank you, Councilman, and thank you, Jeremy and Arturo, as well. This is a great baseline for this discussion, and I think we've got some time for some questions, and I wanted to start with one question for Arturo and Lee both, and maybe you take it in that order. So, but both of you have talked about the importance of attracting private investment, and Jeremy has done a very good job of laying out the interest for that private investment. And so, you know, there's the city participation, the private investor side, and then the other portion in that really is the financing, the lender piece. And I wanted to talk just about that in a historical context and get your response. I can recall two particular projects that were, I would say, relatively in the urban core area that Councilman Barnes had discussed, one about 15 years ago and one as recently as 12 months ago. And in both cases, the investor, the equity piece was there, the city financing support was in place, and the tallest order was really filling in that private financing portion. And some of it was local lender perspective on the demographics and the geography of that location. And then more recently, just a simple bifurcation of a census tract. So I think what that relates to is, one, what is the impact then of what I call just historical redlining on getting that private investment, that private lending piece into the urban core? And then aside from the financial support, what role do you think our cities can play in assisting with that discussion? Arturo, maybe you can react to that first from a Houston perspective, and then we can have the councilman answer as well.
Well, I think that public-private partnerships are still in its infancy. I think in many parts of the country, clearly into the case. And so I think municipal government is still exploring how to do it. And I think with redlining, there's a view right now of looking beyond the traditional economic drivers in the community to see what can be done for development. But picking up, I think, on something Jeremy said with municipal revenues being down, I think there's going to be a greater need, and people are going to be looking at that already. I think anytime that there's a crisis, and clearly the pandemic is one that cuts across every sector of the country, you're going to have that issue. I had a conversation with Houston First, which is the convention and entertainment bureau of the city. That's actually a local government corporation. It was spun off. They were underfunded even before the pandemic because they were underinsured with regard to what happened with Harvey, hitting some of the entertainment areas, some of the arts facilities that they had ownership interest in, and particularly the parking garages. So I do think that there's going to be a big need for that, and I think the current crisis is really going to accelerate that. And with that, I will let Jeremy and Lee pipe in.
Councilman.
Yeah, Arturo hit on a segment that I think we in Kansas City have been dealing with, and that is when we talk about private partnerships, public-private partnerships. We have invested in downtown apartment buildings to the tune of paying for garages that a lot of people in our city, quite frankly, now are wondering if we should have done those investments. But moving forward, it's going to take those type of investments still, but the private sector is going to have to understand that cities are not going to be able to be as free with the dollars that are there. We just won't have them. Jeremy mentioned that on average, a lot of cities budgets are going to be impacted by 30% or more just due to the COVID-19 situation. We're fortunate so far here in Kansas City that our revenues are not down quite that much, but they still are down 12 to 15% or so. But we don't know what the long-term effect is going to be as we continue to move forward in the COVID situation. But I think that was a great question, Charles.
Mm-hmm.
Thank you. The next question is for Jeremy. What is the current private sector investment status on infrastructure reinvestment?
Current status on infrastructure reinvestment. Well,
correct.
I would ask that person over there, I'd ask for a little more detail. The current status on reinvestment, I'll say this, I'll just give a few points. I didn't go too much into just the market, I'd say the market of investors, if you want to call it a market. But there is a large market of investors across the world that are looking at U.S. infrastructure and would like to invest. This was before COVID, and this is probably after COVID, and this is before, this is just general interest. So as you know, traditionally you've had the public finance model of investing in U.S. infrastructure. You generally utilize tax revenues, or you actually utilize the revenues of the system itself. But there's been that is an American, purely an American dynamic, in which you'd underwrite bonds to do that, to do these kind of projects related to that. And design, build, or take traditional means to build out a project, and your operations and maintenance would be, in some cases, done well, or in some cases not done so well. The private capital and the play of infrastructure capital into public projects is one that across the rest of the world, especially the developed world, if you look at Canada across the border, you look at South America, even you look at other parts of Europe and Australia, it's pretty standard that private capital would be involved in investing in what are assets that in the U.S. are now publicly owned assets, transit systems, airports, et cetera. I'll give my opinion. I'll put it out there that I think that there is definitely a resizing and a readjusting of how the U.S. is going to continue to finance, operate, and maintain these assets. A lot of it is really due to the fact that you can't, I'll put it simply, you cannot live your entire life on a credit card. You can't publicly finance or debt finance every asset you have. Also, there's a focus that we haven't really mentioned, which is you have significant pension obligations for a lot of municipalities, a lot of states that are growing and that need to be paid and that need to be financed, basically. So you may need to direct a lot of revenue that you used to put towards public assets towards those pensions. Then you also have increasing healthcare costs for additionally, again, you traditionally where you had a lot of money that was going towards public assets, you now need to redirect them towards healthcare, which is also increasing in cost. So that leaves this chunk of finance of assets that need not only to be maintained, but also need to be enhanced, and in some cases need to just be built. In places like Houston, example for where Arturo is, I can say that there is a shortage of transit in many cases. A lot of people drive in Houston and in Texas in general. So how do you build out a transit system when you have all these other obligations? There is an estimated $400 billion in what they call dry powder capital that is not yet put into action, that is waiting for particularly U.S. infrastructure to invest in. And there are also along the way, you can name the construction companies, the rail operators, the transit operators, the transit car developers that want to put their assets into these, their capital and their projects into these into public, what are now publicly run and owned assets. So I'd say that the interest is very large. I'd say that the P3s, public-private partnerships, which have been mentioned, is definitely a tool that can be utilized. It's not the only tool, but it's one that is, I think, particularly pertinent, I would say, at this juncture for many municipalities, especially when you consider that you're looking at significant shortfalls this year and in years to come. If you were looking at getting out of this the situation and investing in your infrastructure, you may want to consider a P3. In addition, in a relationship or partnership with a private investor or operator, the public entity can drive. These are not handing over assets. You're not selling. These are long-term contracts. And within every contract, you can dictate exactly the kind of other dynamics you want to bring to have the private investor bring forward. And that includes the equity dynamic. That includes having minority investors, particularly in projects. It includes having minority contractors. It includes having female-owned businesses. It includes having veteran-owned businesses involved to the degree that you require. You are able to create those requirements and apply them as hard as you want. I'll give you an example. In the state of New York, Governor Cuomo directly for projects in the state of New York has directly required 30% participation of minority-owned and women-owned firms across every vertical. That includes putting in windows, to investing large amounts of capital, to providing legal services, to accounting, to insurance. He has driven that initiative for New York. And as you know, they're doing a lot of significant projects in New York. So my whole point is that there's a lot of interest. on the public side, those of you that are on the public side, you can drive the needle here with that capital. You can, as long as there's a return that we find that is acceptable for our investors, which are generally pension funds and insurance companies anyway, we are willing to work with you very closely in as far as getting assets delivered to your communities.
Jeremy, let me just pick up off of that because it is important to identify, that return that's available for the investment that's needed. And a lot of the discussion has been around development focused on, growing the tax base. The other development that fits into this, I think, is workforce development. There was a time when we were in person talking about the strengths of the community benefit agreement with respect to workforce development. Councilman Barnes was a big leader in a large one of those. So my question for you is, to the extent there is a workforce development component to these types of projects you're investing in on the private side, what's the perspective on that, both the long-term value and the underwriting view of having a workforce development component to these investments?
Thank you, Charles. I forgot to kind of go a little bit deeper on that topic. And when Councilman Barnes mentioned community-based workforce plans, yes, that is a big part of these transactions that can be driven, and basically you can hold your partner to those requirements that you set. They say public-private partnership, but I mean there's so many. This is about people. This is about policy. This is about politics. There's so many different places, P's within this that acronym, but that is one part that I will say for investors, it is one that needs to be worked pretty directly because you are going to run into a lot of issues. You do not want, when you're investing in a project, you do not want to have, when you're trying to deliver a project, you do not want to have these kind of challenges not met. So the question is, can you afford to, from a return perspective, meet these requirements for workforce participation, for example, or MBE participation? Well, that is our challenge, and we will work together to get to that point. So I'd say yes, we're going to do everything we can to meet the requirements you set on the private side. I would suggest that on the public side that you are clear about what you're trying to meet, the goals you're trying to set. It's up to both sides to either contract or work with contractors that can help you get there, or do it, find a way to get there directly through the agency, the public agency directly. But I'd say, Charles, it's definitely a goal that we want to meet. We do not want to fall short on, and I can tell you that across projects you see that effort being made consistently across. And like I said, not only just workforce, but also, which is obviously the most important, just creating jobs, creating opportunity within communities, which I think is a critical piece to infrastructure, and public-private partnerships, which is one that we at Phoenix think is essential. Creating opportunity within the communities that looks, breathes, and lives within those communities. That is critical. So we can work together to get to that point. And as far as it is not something ultimately that will hurt the return, because it helps you get to a project. It helps you get to a return. It's a more organic way to get to the goal.
Thanks, Jeremy. Our next question is for Arturo and Councilman Barnes. The question is, to the extent state level investment and support is needed, how has the rural versus urban priority competition impacted this need? Arturo, we'll start with you.
Sure. To me, it goes back to the point I made initially in my presentation, in that I think many of the issues are regional issues. And I think local government is seeing that to truly be effective, you have to reach not only regionally, but statewide and also nationally on some of these projects. And so I think you have some tension to some degree. I know that there is there's a high-speed rail line between Dallas and Houston. It has caused problems in some of the rural areas because of the concern over condemning the property needed for the line there. But I think generally, particularly with issues like water and transportation, we really should have synergy that's involved in there in working together. I just think that our problems become less local and bigger, regional, national, global. And so I think there's a greater incentive now to work together. I don't think you have the separation that you had before between rural and urban. It's not complete, but I think the shift is moving in that direction.
I'll jump in here real quickly and just simply state, I think most states are finally starting to see that the economic engines of their states are generally the urban cities. When I say economic engines, primarily, where business is happening is usually in the cities. Now there are, states that have large agricultural development going on and those kind of things. But I think the economic engines of most states are happening within the larger cities, and I think that's just becoming a realization even with most governors.
Great.
Thank you. We are up against the 10 o'clock time frame. So if there are any other questions from the audience, please send those through and we'll get to those via email. Wanted to thank the panelists for joining us today and all the participants. We hope the information that was provided was helpful to you and your organization. As a reminder, this program has been approved for CLE education hours. To report your hours, click on the CEU icon at the bottom of the screen. A certificate of attendance, including course numbers, will be emailed to you tomorrow, along with a recording of the webcast for watching and sharing. And then be sure to complete our short survey. We do use your feedback to plan future programs that are applicable to your business needs. This concludes our webinar. Thank you.
Thank you.
Thanks, everyone.